So let's put some more advanced example in, and again, we're just staying on the internal point of view to get you that point first before we combining it all with the higher time runs, right? So guess what we will do? So that's a tricky one, because again, some people might ask like, oh, why does the inducement not happen in London or whatsoever? That's why obviously the structure comes into place, really, really important. For example, in here, there was a liquidity to the left, maybe a very significant structure. And as you can already see, this already has some sort of vector candle characteristics, plus before that, huge uptrend building. And the vector candle to finish it off properly, right? So this already is an inducement. Okay, so the question is, where is the main inducement for the day? Even if we break the day, and obviously we start here, that's our starting point. But if you look at the bigger picture structure, we should understand that the inducement is where? No, not Asia highs. Right, that's why we have to think about, no, that's why we have to think about out the box. No, it is here. This already was the inducement. And again, just because it's on the day yesterday, if something like this takes significant structure, then of course we don't need a London open inducement because we already had a main inducement to the left. Make sense? But then again, it's the same thing over again. Now this time it becomes a little bit more challenging because it's a little bit switched off. It's not the perfect scenario anymore, right? But guess what? If you just took the smaller cycles, it's the same thing all over again. So what's going on here? So first of all, knowing that, in which direction should we trade? Just looking at the bigger structure and where the main inducement is. There you go. Exactly. We're looking for shorts. And of course, by doing that or knowing that, what should they do if they want to go lower? Right? Of course, they want to do higher even once more. They don't need to induce this point in here though, because again, the inducement is in here. They just need to induce like a little bit. We don't know at this point how much. We have a very good understanding that they just want to build up the channel, but overall direction should be short. You technically don't need this London inducement in here anymore because we had this inducement already here. Okay, that's why we have to think about outside the box a little bit. And of course, that's why the whole thing can change a little bit. It can become a little bit confusing. Okay, but first knowing that, what do we have? Of course, we go induce high to go even lower, right? So now we have the Asia range being closed. Frankfurt kicks in, makes the last inducement high in here. We don't know how much it goes. Of course, we have a good understanding of the last mitigation in here. Of course, not something we wanted to trade at. But again, we're trading away from this inducement. Of course, we want to trade away from that. And we're just looking for short opportunities, right? So guess what? They're giving the reaction. But what is going on here? Yeah, and outside the box thinking is literally exactly what you need to do here, girl. So see, that's the box. You need to think outside the box. Ha ha ha, what a joke, right? Makes sense. So anyways, so what is what is going on here? What are they doing in here? Of course, they're faking a double bottom, right? So what is going to happen? Do we expect a reversal now? So should price pretty much go like this now? Oh, there you go. It just smokes through it. It fakes, of course, the double bottom before it does it. Not a surprise to us anymore because it needs to, retailers need to be induced. Obviously, that's why the small reaction happens. Then it smokes through, right? So now advanced question, right? So can we expect a reversal now? We don't know at this point. If you just put it like this, okay, we got a minor inducement. That's our build-up. Minor inducement. And what's going on here? What is going on here? Right? So what we have in here now, we first of all, now think closely because you need to put the pieces together. This is the main inducement for the day. We want to trade away from that inducement because that grabbed liquidity. Okay, we need to trade away from that. What they're doing now on an internal basis though, they're faking the double bottom, giving you the minor inducement, and now they're mitigating that minor inducement. Okay, So what could happen right in this specific moment in here? First, they complete the minor play first, like this. This is the minor play, build up, minor inducement, minor break of structure, minor mitigation, and of course it gives the minor play. Make sense? So advanced question only again. What could happen here now and why? Again, just give you a few hints now. So hint, now we have London open. Another hint, look to the left. There's the next liquidity. We never grabbed liquidity at this point, did we? No, we did not. Right? Where's my pen? There we go. Why is it giving me the delays? There you go. Right, so we never grabbed liquidity to the low. We only had minor plays at this point. Another hint, internal break of structure. Choop. Right? So what is going on here now? Of course, we had the internal break of structure, the minor play, minor inducement, minor break of structure, minor mitigation. What's coming next? Mitigation of the rally area away from this, right? But guess what? What do we have now? And now things getting a little bit more challenging because now you need to really start thinking. Now, what is going on here? We have this inducement now after a minor play, but did we grab liquidity to the left yet? No, not yet. However, is that a valid play with an inducement here, inducing lower with London session confirmation? Yes, it is. So what can we expect if they want to go way lower? Inducing high and then go low. So that it becomes a little bit advanced in here. So now we know this is already a London trap open here. So we expect inducement high to do what? Grab liquidity to the left because we never did. Right? It becomes a little bit advanced. I know. So guess what? They're inducing high after the London trap, after minor cycle in here. Right? So the question now, what should happen next? A, we will take out the main inducement for whatever reason. Or B, we trade away from the main inducement and understand that we trapped enough liquidity for the intraday play and go for the next liquidity zone, which is obviously here. There you go. So hint, we never had an inducement here. Right, another hint, they induced high now. The internal structure being induced high now. And of course, we had our inducement in here. So guess what's going to happen? We finish, of course, the cycle like this. Right, and that's where thinking out the box, always looking to the left, will help you significantly as well. Because again, for my, you may think, oh, that's London, whatever. It should induce Asia high here. But again, the overall play, again, makes a lot of sense, but at this point, it's more like being like this. And you already see you need to think a few steps ahead because it's not always like they're doing one obvious thing and then immediately doing the next thing always. This is so here. Minor inducement of Asia range here after the build-up. Minor inducement, never took something from the left, but still the minor play you can trade. So you have a minor inducement in here, internal break of structure in here, having the imbalances, right? Getting the mitigation. Where is it next good to go? Until, of course, the next supply area in here, right? But this is only the minor play. Now you have to think again, oh shit, now it's London open. London open got the information again. Oh, they're taking the buy. Awesome. So let me induce them low first, making again the inducement low to grab the people buying or selling, right? Then again, never had an inducement to the left. So they faking again the buy trend to building up the liquidity buy side, giving these false higher highs internal. But again, the overall plays we're trading away from this inducement in here. And now we can look for the short, inducing high to go low again. Again, it will all be like a chess play or like a chess game. And we need to start to putting these things together as a chess master or grandmaster They don't play normal chess. The best chess masters, they can think like literally 20 steps ahead. I think the average of a grandmaster was 15 steps or something like that, right? And you need to develop that mindset. Again, don't see the obvious thing and then get confused when like, yeah, but they told us like whatever, inducement here, mitigation here, why did it fail? You need to put all the steps together. And of course, that's how we play this ping pong style. Again, if you look at my Insta, for example, guess what? That's the first buy. That's the first sell. That's another buy. That's another buy. That's another, whatever, exiting the buy is here. And there's the first sell in here. And obviously, that's how you play the normal play. And it all starts to make sense. The more repetition gets obviously into place. But for now, just again, start thinking like that. You don't need to be there, obviously. The only thing which is important at this stage, don't be like this, right? Be like confused and like, ah! Right? Because you cannot think those all steps above now. Again, it will develop over time. But as you can just saw, we need to develop those thinking in order to make the best out of it. It's not always that obvious. And as Alex said, focus on the Mona Lisa plays and don't try to play this whole ping pong style immediately because it will be hard on the beginning. That's the obvious answer, right? So you need to develop this thinking step by step, what should come next, or what do they show us now? And again, always show what they show you now, not what you want. Again, in this again, build up, minor inducement. Of course, I want this thing now to go to the moon. But what do they show? They show the main inducement in here. Now they show me the perfect mitigation. After an internal break of structure, a minor one though. So this is good until the next area in here. Then a trade after the bigger picture break of structure in here. This is a valid thing now. Now I have the inducement in here. Awesome. Now I know this is London. Okay, London trap. Never grab the liquidity. Awesome. What do I do next? Need to aim liquidity again. Inducing high. Make the candles in order to fulfill the whole push, trading away from the inducement. And that's how you develop slowly but surely, again, this grandmaster thinking, step after step, thinking a few steps ahead. For the internal play though, the ideal scenario again is build up in fake direction, then the minor inducement of Asia as a requirement, then of course a smart money trap after, then a final inducement with timing, and that final inducement with the timing should get into a mitigation area with an imbalance that gives a valid POI. Okay, that's the main steps you need to follow for an intraday approach. Of course, if you combine the whole overall picture like Alex did earlier, and what we will do later on, the whole puzzle gets together. But first, understand the intraday approach, understand the overall big approach, and then we slowly starting putting everything together. Okay, bigger play, smaller play, bigger play, smaller play, and then a combination. So for an intraday play though, again, without taking too much, they're good with that slide. So build up in fake direction, minor inducement of Asia, smart money trap after, and then final inducement with timing, and then into a mitigation zone of an imbalance that gives a valid point of interest. Okay. So if you look at that in the charts now, again, what do we have in this example? It's the same thing all over again. You have Asia liquidity in here, building this quadruple bottom, false inducement low. To do what? Push price higher, building this false channel. Short side, what's the next thing we can expect? Smart money trap, inducement into valid mitigation areas. Right? There you go. Becomes a FFS. Look at the clock. Timing confirms the mitigation. And of course, gives the reaction. What do we do after the reaction? Internal break of structure. No, not really, sorry. Not an internal break of structure. Maybe under 1 minute. But guess what? We can make our markup the imbalance zones. Gets there, mitigates it. What do we do before that? Building up liquidity, inducement into the zones. What can we expect? Of course, or pretty much what should we target at? Of course, low in here. And there you go. That's how you do, obviously, the overall play and the internal structure. Just looking at a little bit to the left. Of course, it will be clearer the moment you're putting more stuff into the whole place. And also it will help us even on the bigger time frames, like if there's no clear points of interest, for example, like this. Like, of course, our point of interest for the 1 hour, this is the 1 hour, by the way. this is the 1 hour, we would usually pick this point of interest in here and never this one like randomly, right? So why did we pick this one now instead, you would ask. So again, it's the same thing all over again. What is going on here? Equal lows. Smart money trap already, right? Smart money trap. Failing. What do they do? Building this short channel. Now, this is obviously Asia range in here. And look what they're doing in here. Vector candle to induce these areas. And of course, our ideal scenario would be in here. But as we know that this is the 1 hour, this is still a lot of distance to cover. So what we will do instead then, we dig into the intraday play. This is the intraday play, and you see something like that. And out of a sudden, you should understand, oh shit, that this area we just marked up, just based on the timing and on the internal play, look at it, building the channel, false channel here, huge vector candles for the inducement, even more second push with, again, huge vector candles into this mitigation area to the left. But guess what? London Open almost to the minute. And again, this gives you a valid point of interest for an internal play with even if the higher time frames are not clean. And that's how you combine the whole thing. If the 1 hour is not clear, maybe the intraday play is. If the intraday isn't clear, maybe the 1 hour is. And that's how we will jump from bigger structure to intraday structure, so on and so on and so forth. Right? And guess what? What will happen after that one? With everything you know so far, just looking at this bigger picture, what should happen next? Of course, the tube, right? And then we look for entry opportunities, obviously, after that. Okay? And again, the higher time frames support the lower time frames, and the lower time frames support the higher time frames. It's always the same. It's just a way of how we're combining things. Okay? For this week, though, again, as we have a whole week until the next week, and as we're combining everything, you need to get a feeling for the bigger picture, meaning intraday plays plus the overall structure, how Alex covered it. Okay, but first, focus on intraday and on the bigger picture, like separate it. Don't put everything together yet, because we will do that obviously in day 3 and 4. Just understand like the bigger aspect of it, with the demand and supply plays, with the decisionals, with the extremes, break of structures, and also the intraday plays. And then slowly but surely we combining it, because if you do that right away, you will confuse yourself, and that's what not we want. So that's why we separate it a little bit now, in order to combine it everything properly when we have all the time for it. Okay? But again, another example to make the intraday even more clear. Again, we had it like a couple of times now. There you go, smart money trap, inducing it, proper mitigation, timing, tube.